Part of our strategy as multifamily owner operators is to be extremely focused in our approach. So we don't want to be in a bunch of different markets all over the country. We want to really know and hone in on specific markets. So the majority of our portfolio is in Houston. And up until recently in 2023, we've expanded to Dallas. And then now in 2024, we've purchased our first property in San Antonio. So
welcome to the Real Estate Reserve Podcast. I'm Jason Balin from Hard Money Bankers. This is Ian Horowitz from Equity Warehouse. If this is your first time tuning in, welcome. We appreciate the support. I promise you, you and we will have a good time together and learn something as well. If you are a returning viewer, follower, listener, thanks so much. Supporter, thanks so much. We appreciate all your support. It means a lot to us. And as always, we try to bring in good guests that are actually doing deals. I think that's important. No gurus, nobody really trying to sell you anything. Guests that are active in the real estate community. Our guest today that Ian's going to introduce here in a second is focused on the multifamily asset class. So something that Ian and I are definitely familiar with, but it's great to get different perspectives from different operators.
Yeah, I'm excited for today's topic. But before we bring Dasha on, guys, if you get any value out of this episode, like Jason said, we bring in real people that are doing real deals. Please feel free to share the show, comment. That's the best compliment you can give us. We don't ask for anything in return. So if you're getting value, make sure your friends are getting value too. And feel free to push that out there. So we appreciate you guys. But as Jason said, enough about me and Jason. Why don't we bring Dasha Beardsley in from Lone Star Capital? And she's there she is. Hey, Dasha, what's going on?
hello, I'm doing well.
Yeah. You want to just give a quick background about yourself and where you're located and what you guys do?
Sure. So I'm located in New York City. Contrary to Lone Star Capital's name, which is for Texas, we own and operate properties, multifamily properties in Texas. I'm the director of investor relations for Lone Star Capital, and I've been with the firm for about 3 years now.
So why Texas? I see that you went to college in California. You have an office in New York. What was attractive to Texas?
So I wasn't part of the decision-making process for Texas. I do still think that it's an amazing state. There's a lot of opportunity there as far as, there's multiple different markets within Texas that are great for investing. It's landlord friendly. But the reason why we haven't necessarily expanded outside of Texas is because part of our strategy as multifamily owner operators is to be extremely focused in our approach. So we don't want to be in a bunch of different markets all over the country. We want to really know and hone in on specific markets. So the majority of our portfolio is in Houston. And up until recently in 2023, we've expanded to Dallas, and then now in 2024 we've purchased our first property in San Antonio. So those are our three markets for the foreseeable future, and we want to just really focus and be the best in those markets.
Yeah, I mean, Texas is like literally its own. Every time I go down there, I'm floored. Growing up outside of Philadelphia, we hate Dallas, like just from the football standpoint. And it's like, oh, screw Texas. Every time I go down there, we just hosted our mastermind event, and I'm just like floored. Like it's like literally its own country down there. Yeah. It is impressive. We're up here in the Northeast, all of us, and it's so condensed, and you get down to like Dallas, Fort Worth, and it's mind blowing. We have a storage facility just outside of Houston, and the expansion and growth inside of Texas is it's almost unimaginable for people to understand if you're up here in the Northeast.
Yeah.
It's Ian, what do you think the percentage of guests that we have on this show that have invested in Texas is?
I mean, as of recent, it's been really, really high. We've had land investors, we've had storage investors, we've had multifamily investors. Texas is popular. I mean, again, it's a gigantic state. It's huge. I mean, from the storage standpoint, it is a very friendly state, and I can only imagine how friendly it is compared to what we deal with here in Maryland or New York or any one of the Mid-Atlantic states, I mean, can you talk a little bit about like how being a residential property owner in Texas is and like the benefits of operating there?
Yeah, so like you mentioned, there's a ton of growth, so that's a really big appeal. Some of the fears that people have within Texas, specifically in Houston, is the energy sector over-reliance on that for jobs. But we're pretty strategic as far as looking at what job markets are in the specific locations that we purchase property in. So that's something just to be mindful of, but it's definitely something that, doesn't deter us. And there's robust healthcare industries and plenty of other jobs and job expansion in Houston outside of the energy sector. And then, of course, Texas is in the South, and so it's a lot more landlord friendly. Not to say that it's just a free for all as far as evictions, but you can definitely get more things done in that regard and less rent control, the types of restrictions on landlords.
At some point in this conversation, we're definitely going to jump into some of the investor relations stuff that you're responsible for inside Lone Star Capital, because that's always kind of a sexy topic to talk about. And I think everyone's always interested to know how capital's raised and things like that. But related to the multifamily as an asset class, like what type of, like what size multifamily projects are your sweet spot? Like, is it per unit? Is it per square footage? Are they value add properties? Is it ground up construction? Is it already existing buildings that, are already operational and already great and you're just kind of taking over them? Like, let's talk about that a little bit if you don't mind.
Yeah, so we haven't done any ground up development. That is something that we would want to expand to at some point, but like I mentioned, just with our strategy of being extremely focused, we don't feel that that's an undertaking worth doing at the moment. We just want to still focus as much as possible on existing acquisitions. Within acquisitions, we do have a range of heavier value add and then more kind of core and newer vintage properties. It just really depends on the situation. I would say right now we're looking at more just newer, nicer quality properties because we still see that there's a discount right now in the market. Transaction volume is down, but the properties that we are seeing, we feel that it's worth to go for the higher quality and newer assets. And as far as what our target is, I would say anywhere from 200 to 300 units per property.
Yeah, no, that's good to know. And I mean, obviously, like as you start to invest or you bring in investor capital, they want to know exactly what you're going to be investing in. I see you guys have bought, and I feel like I like caught your brother early on, right as he was getting started, or you guys were opening up the firm. You guys have grown $600 million in assets since 2018, which is wild because I'm like, oh, we got to 70 million. And I'm like, cool, but like 600 million is like an insanely impressive number. What does that look like from the investor capital side of things? How much capital do you guys raise? Is it coming private equity? Is it coming family and friends? Like, what does that all look like?
It's definitely deal dependent. We have, I would say, I don't know if we're super unique in that regard, but I do think that similar firms maybe are a little bit less varied in their equity sources. They focus more on retail or they're more private equity shops, but I would say we have a really wide range of different equity providers that we work with. And I would say for the most part, we do a combination. We do a lot of retail capital, and then like we have our own tranche of smaller investors bringing anywhere from 50,000 to $1 million. And then we have like fund to fund, co-GP, that type of middle-sized check. And then sometimes, depending on the deal, of course, we'll do a JV or have a family office come in for a larger portion of the check.
From your standpoint of servicing the investors, which one is your favorite? I could probably guess, but I'll ask you, which one's your favorite capital to deal with?
It really, really depends on the individual, I would say, because there, are some larger equity providers that we deal with that are some of my favorite people to work with. So gracious and lovely to deal with. Of course, there's more demands, but that just goes with the amount of capital. So that's, I would say, maybe a little irrelevant And then there's maybe a $50,000 investor that is also super lovely to work with. Or there's a $50,000 investor that is just a nightmare and asks questions each month, same thing over and over again. So I would say, obviously, it really depends on the individual, but I would say probably honestly, retail equity is nice to deal with, just working with kind of everyday people.
Yeah, that makes sense. But then the way like you framed up the private equity side of like just being B2B, like you know what you're getting into. Like when we source deals, I like sourcing deals from brokers because it's more B2B than say the retail, going out and finding off market deals, and you got to start the relationship. And while it's really fun, you're building rapport and I can build a rapport instantly with a broker. So I can see how both sides of it could work.
Yeah, for sure. It's a little bit more pointed of conversations, I would say, when you're working with fund to fund, co-GP, and up.
Yeah, direct.
What size, just for context, what size is your average deal? Like between, for the entire capital stack? Like,
so the purchase price, I would say, usually around 30 million, something like that. It depends. We just closed our largest deal ever, which is a 3-property portfolio, which was 105 million. So that was by far our largest acquisition, which was really exciting. So I would say our equity that we have to raise for each deal is around 12 million, around that mark.
It's not bad. Yeah, that's not bad. Okay, so that gives some context. And when you're raising equity for these particular deals, just for folks that are kind of tuning in, are you waiting until you have everything kind of in place, and then you're going out to do the raise, or are you trying to get soft commitments up front, being like, hey, we have this property, we should be taking it down, whatever, in 6 months, let's get started now before it's a definite, or are you prepping decks and things like that up front just to have everything kind of ready, and then it's like, hey, full on capital raise for the next 30 days?
Yeah, so I would say we have a structure and a process for each deal, and it might look a little bit different, but we do an early reach out to more of our JV partners, private equity, larger equity, as well as fund of fund and co-GP. We do that as soon as possible. And so we do that usually after we get an LOI accepted. Then basically once we have the purchase, the PSA signed, we go full-fledged capital raising to everyone. But yeah, I would say like we definitely don't reach out to our smaller retail investors before they have a deck. Like they're not going to want to, there's no point in really discussing before there's the deck. They usually rely on that for all of their information. And I would say as far as when we reach out on that preliminary list, we make a quick memo to talk about the story, high level oversight of the numbers and returns.
Yeah, that definitely makes sense. And, it's always funny, like getting a deal under contract. Jason's over here always bugging me. Hey man, when you got next deal? I'm like, I got nothing. And it's like, hey, I got a deal. All right, well, I'm not ready. It's like, come on, man. Like, and it's always like that balance, the seesaw balance of like trying to, and I guess that's where maybe some of the B2B capital is better. Cause you're like, all right, so-and-so fund needs to place $1 million. Like I kind of can target and start planning versus the retail investor. It's like, all right, well, you have 50 grand or not. Like, I don't mean to push you to the side, but in the same sense, it's like, I need to know and I need to go. It's interesting to balance that capital out while always raising capital at the same time. Like what kind of outlets or sources do you guys do to provide information, or what's your funnel look like, top of funnel, lead magnet, to bring people in to start getting to invest with you?
Yeah, so as far as our top of funnel, I would say a lot of our leads come from social media marketing. We're on social media 5 days a week on like pretty much all platforms. So that's where I would say the majority of our leads come from. Also, a big source of our investors and just outreach in general has been through the 2 books that Rob, my brother, has published. So that has really expanded our growth. As far as the equity process looks like when we're actually raising capital for a deal, most of the time we've only done one 506C actually, so we do a 506B. So we haven't done any ads, any paid ads or anything like that for, actually raising for a deal. So we just reach out to our existing list of investors. We host a webinar, and then we also call not everyone on our list, but basically anyone who's kind of shown some interest or clicked around on our emails.
And real quick on that, are you and for the retail investors, is that like, year round all the time, knowing that even if you don't have a readily available deal right now, you're still kind of out there proactive, so they'll be available when they do have the next deal that potentially comes in?
Yeah, so we're constantly building new relationships with investors, and our goal is to always be raising for a deal, so that if we have an investor that's ready to invest, that they have an opportunity to do so. But there's definitely times where we are talking to a new investor and they want to invest, but they maybe have to wait a month until we launch our new deal. But yeah, we have a new investor form on our website, and so we basically just start the relationship. After there, schedule a call, all of that, and to kind of get them prepped as well to invest once we do have an opportunity.
Yeah, and 506B, I always get all the letters confused. I just let the attorney tell me what I'm allowed to do and not do. 506B's accredited only that you have previous relationship with? I can never remember. Do you remember?
506B is they don't have to be accredited. You have 5 non-accredited slots for your for each offering, and you can't market it publicly, so we can't post on social media that we're raising capital for the deal and things like that. And you do have to have a pre-existing relationship, but I would say that there's different ways to interpret the relationship as well. Like what you have to talk, and it needs to be for 30 days as well before you actually accept their funds.
So that's where the book comes in. So you guys are marketing for the book. I'm just kind of breaking down the funnel here. You guys market for the book, get people onto your list. They kind of pay to say, hey, I want to check out your book or your underwriting template, whatever. I'm starting to learn about the process. Then you hit them with an email, hey, we're raising capital, because now you've started to establish a relationship, and they continue to build off of that.
Exactly.
Yeah, that makes sense.
How much of this did you learn in college versus real life?
I was going to ask the same.
That's a good question. Well, so my degree was in real estate development, and it was surprisingly a very broad curriculum. So I learned a lot about like transportation, urban planning, architecture. Of course, I learned economics and statistics and, like market fundamentals and stuff like that in real estate specifically. So there was a lot of overlap. I had like a modeling class as well. But as far as investor relations, that really wasn't covered very much. And I think that that's probably true amongst most in real estate degrees in the country.
That's right. Well, I mean, it's funny because we got 3 different people on here right now with different. I mean, I have a college degree from University of Delaware, but like it obviously was not in real estate development or private lending or anything like that. But it's funny because you could get a lineup of a dozen successful real estate investors, and they all have very, very different backgrounds. And I'm always very curious which ones have a degree or have higher level education with this. And it seems that the ones that do do similar projects to the way you guys set up your projects. And like I think kind of in my world it's a little bit more sophisticated than the stuff that we particularly do. It's just different, and I'm curious. Let me ask you this question: do you think that you could be successful in the way that you guys are running your business without having gone to college at all?
Yeah, 100%. I think it was helpful. I definitely learned, but and it also kind of expanded some of my interests. But I would say, as far as what I'm actually doing right now, I don't think I really needed my degree. But to be fair, my brother was the one who started the firm in 2018. And my parents also have their own multifamily units in Texas that are separate from Lone Star. And so basically whenever we're all together, it's all about multifamily and talking about, real estate in general. So I learned, I would say, the most just being in my family and overhearing these conversations and listening to my brother's phone calls. So I think for someone who doesn't have as close, proximity to someone knowledgeable, maybe a degree would be more helpful.
And I think there's one thing that you guys have that I get jealous of sometimes, and Jason always reminds me of this. I do not have a college degree, but the relationships you guys formulate in college potentially are a little different because you're working professionals. Now you're raising capital. Our buddy Pete went to Notre Dame. It's like, hey, man, you want to raise some capital with us? And he just hits the Rolodex like it's nothing. Meanwhile, I'm like, I know a bunch of broke firemen. Like, hey, who wants to invest with me? But, everybody has their place in the marketplace. I like helping first responders that are well off to invest in real estate the same way that, you guys have different Rolodexes than I do. And I resonate with them. And I doubt that maybe you resonate with them. And I think that's what makes the world go round. And that is the one thing that I would say that you guys get on that side is that relationship and being exposed to a different group of people by going out and putting yourself in the college world. I'm just not a college goer, not for me.
Yeah. There's also the other side of that where I think a lot of very intelligent, sophisticated people can't do real life deals. Like there's a fine line between that, right? There's the over education, under execution, right? Like, a lot of nitty gritty real estate investors, especially on like the smaller residential side, they'll just go all in and not even know what the hell they're doing and get themselves in trouble.
Yeah.
Because they'll be like, oh, I'm just getting capital from anybody, or hey, I'm going to go build this thing without any permits, or overpromise, whatever it is. And then, which is no good. And then the other side, I know a lot of extremely, smart people that, have college degrees in real estate development and stuff like that, that they'll be behind the scenes and run the analytics and the modeling forever, and they'll never take action, never do a deal. So it really does take, both, you got to have kind of both sides of that in order to do stuff.
Yeah. Well, and it's also interesting if you're thinking about who's actually teaching the curriculum. Most of the time, they're not actually doing deals. If they were, they probably wouldn't be a professor. That's not always the case. For sure. I remember I had a few that were actually actively buying deals like retail in LA and things like that. So, and those classes were actually the most interesting, and I felt like I got the most out of.
Yeah, I had the chance to speak at Temple, a guy that helped us underwrite a few deals early on. He was a professor and he actually does deals. And I said, well, Bob, why do you want me to come in and talk to all these dudes? So he taught at Temple and Georgetown online. And I said, well, the Georgetown guys are getting their MBA in real estate development. He's like, yeah, but they just work at a firm and they're never going to do a deal. And like, you actually go and do deals. They need to hear real life experiences because they're somewhere in the middle of theory and real life. And that's where we all live, right? Like we know the theory side of it, but we know the real life side of it. And that's why I think we're all successful. But it is fun to go talk to the classes and say, hey, this is the real crap. Like you're learning this on paper. Now go apply it. Good luck. Like it's not always just because you put it on a pro forma doesn't mean it's going to happen, right? One good hailstorm, whatever it is, you can get in trouble really quick.
So what type of? I know you mentioned you also run your internal in-person summits. Like, how are those set up? Like, who's your target audience for that? Is that real estate investors that are looking to learn and to grow multifamily portfolios, capital investors that are, talk maybe a little bit about those summits and how those are set up to.
Yeah. So we just within the firm, and I'm sure a lot of people within this industry have been to countless conferences. And well, a lot of the times the selling point of the conference is the education. And I think that can definitely be valid. You can learn a lot, but the real value is in the networking. So we started this 3 years ago in September. This is going to be our 4th summit. We really set out to make the highest quality content and really, I would say like a high level content, not aimed for beginners. Just because I feel like most of the time when you're in a large room at a conference, it's kind of catering to the lowest denominator, not in a bad way, but just so that everyone can kind of understand and follow along. So this is really aimed for more people actively in the industry. They're not doing their first deal. And I would say the previous years, it's been very, very equity heavy, which is a really great problem to have. We invite, our some of our biggest investors, also potential investors, JV partners like that in that realm. And so it's been like last year, it was the vast majority of the attendees were equity. And so we realized that while that's amazing for us, what really is the value proposition that we're giving these equity providers? Of course, we want to network with them, but like they didn't want to just sign up to come meet us. So we've changed gears a little bit. And what our goal this year is to have just the best in class operators across commercial real estate in general. So we're not necessarily looking for multifamily operators, but it could be office, industrial, retail, ground up development. That's not something that we do, to kind of really cover all the bases and basically provide a great experience for those operators, as well as the equity that we're trying to bring in.
Yeah, I'm literally reading as you're talking about it. It's on your guys' website, the LSC Summit, and it seems interesting. And then I'm sitting here trying to apply to speak at the same time because it sounds like a fun. Well, being a fireman, One World Trade Center, like I feel like it's just like it could all marry together and bring it all back around. But it looks like an awesome event. So if you guys want any more information, we'll get that in the show notes for everyone. One last question that we forgot to ask earlier on. Like you were talking about like your parents, and I know we're bouncing around, but that's how our minds work. You're talking about your parents being involved in real estate, and your brother, and then you joined. It's like turned into a family business here. You guys kind of all have your own thing. When it comes to like sponsors, your brother sponsoring deals, do you guys co-sponsor deals between the family, or you guys only sponsor the deals? Or are you guys the lone GPs on most of these deals? How do you guys normally set that up, and the importance of having good sponsors when doing these deals?
Yeah. So in 2019, as far as my parents' real estate, my brother actually convinced them to sell their home in California and to buy those apartments in Texas. So it was my brother and the Lone Star team found those opportunities, but we don't operate them or have any real involvement in them now. It was more just kind of finding the opportunity for them. And so that's, their operations are separate from us. So we don't do any co-sponsoring with our parents or anything like that. And then as far as just in general, we do have co-GPs, but we are always the lead sponsor, and we always do the asset management, property management, and acquisitions for a deal.
Yeah, when you're on the hook for the capital, that is one of the most important things you can do. I feel that 100%. Everyone's like, "Oh, let me raise capital for your deal," and or you put capital. I'm like, that's not who we are. We need to run the deal, and that's good to know where you guys stand in that. So, this is definitely been awesome. We've enjoyed, talking about, how you guys are raising capital. I love the idea. So I did a book. Jason's done a book. And so I was like, oh, well, what do you do with it? But then it's like, this is refreshing to remind yourself, do the basics, get out there, put yourself out there, do a book, do content, get it out there. That's why we do this podcast, because we enjoy talking to people and it helps us produce content. One thing we like to ask all of our guests is, what's one book or podcast that you enjoy? It can be business related. It can be fiction. It can be whatever it is. What do you enjoy to listen to or read that everyone should know about?
I think it's pretty popular, so it might not be groundbreaking, but I listen to the Allin Podcast. That's the only podcast that I listen to, truthfully. So yeah, that one's really interesting. It's basically venture capital startup tech guys in Silicon Valley, which is where I'm from. So it's really interesting kind of actually getting to understand a little bit more about the world that I grew up in, but didn't really understand growing up there. So they cover a wide basis of topics, and it's just really interesting hearing them talk about it.
Yeah, no, I'll have to check that one out. We'll get that in the show notes as well. Where's the best place people can find you? They want to learn more about the books. They want to learn more about the summit, or they just want to learn how to invest with you guys, where can we find you guys online, and people can get a hold of you?
Yeah, all of that is on our website, which is lscre.com. So we have our new investor form there. We have links to the books. We have the download link to the underwriting model, and our contact information as well. So it's all there.
Cool. Well, we'll get that in the show notes for everyone. We appreciate you coming on. And guys, like we said, if you get any value out of this, please feel free to share it, and we'll catch you guys on the next one.
Thanks for tuning in to the Real Estate Reserve Podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.